the big bill, or as people in listening might have known, it's called the One Big Beautiful Bill. We'll just call it the big bill for now. It has a huge fiscal impulse for next year. So there is a lot of stimulus that's coming from that bill once it gets enacted, and it has been enacted now. So next year, about 1% of GDP is estimated to, be felt because of this fiscal impulse. So if you take the effective tariffs and the big bill is about a 2.8 trillion stimulus to the economic environment, tariffs aren't going to be as big a drag as possible as we thought originally. So, that I think gives some comfort to the markets. Most of the stimulus will be next year. And it's interesting that there's midterms next year in the US from an election perspective. So we'll see how the economic environment behaves because of that. But a lot of it's coming there. And then it fades a little bit over the next 3 or 4 years. What's going on in the market? I just read a study of portfolio managers investing in the S&P 500, and 68% of them believe that the market's overvalued. But almost all of them also are committing more dollars to the market. And you're a good advisor, and you've been around for a long time, and when you get to that kind of frothiness and that fear of missing out, and you get away from a little bit on valuations, it becomes time to take a look at what you're investing in, and maybe you can broaden out your investments or do something different. Because right now, the concentration levels in the S&P 500 are at historic highs. They're at 40% concentration. And for your listeners, that means what we're measuring is there's 500 names in the S&P 500. The top 10 names account for 40% of the capital weight in that index.